Oh, folks, let me just tell you right now, disregard the noise you just heard. I hope you're excited about this one. And why are you going to be excited? Well, it's because we've seen positivity, folks. You thought this market was down and out. You thought we were done. You thought everything was just ruined. But here we go with AMD reporting earnings, and in the after hours, yeah, up 10%. Quite incredible for what we've seen lately. Obviously, so far this year has been a pretty darn rough time. I mean, just AMD stock, which, by the way, this is an incredible company showing great growth, is down 22% on the year, right? Obviously, with the exception of where we're sitting at after this 10% gain. Don't mind if I do. But the stock's still down $20 from where it started the year at, even after, if this after hours mark here holds up. So keep that into consideration. So still down pretty significantly so far this year. So just want to put that into perspective there. But let's take a look at these earnings and see where we're falling. Obviously, this is a stock that was valued certainly higher than a lot of other companies. And reasons for that, obviously, you talk about it being one of the higher growth companies. And it kind of gives it the, in previous market conditions, I guess, it gives it the right to have these kind of higher valuations from both a P/E ratio and a market cap standpoint. So, looking at these earnings, I see fantastic things. So a non-GAAP EPS here of 92 cents beats by 16 cents. Now, Seeking Alpha doesn't. I don't know why they don't post the GAAP EPS all the time. Look, it depends on the editor. And Nilufer Shaikh. Can I say that? Is that a word I can say? I don't know. But I just said it. Oh, I'm going to get banned. Look, I don't know what you're doing, buddy, but I care about the GAAP EPS line. I want to know how this company's growing the net income because that's a big story with this company. But regardless, let's take a look. Don't mind me kicking the desk, breaking the toe. Look at the revenue line. $4.83 billion is actually fantastic. It's a pretty darn big beat. 49.1% year over year. It's a beat by $310 million. $310 million, pretty big beat when you're considering this company's under $5 billion in revenue typically per quarter. So, or I guess it's always been under $5 billion in revenue every quarter. So I guess that's fair to say it hasn't surpassed $5 billion quite yet in any quarter. Still, fantastic stuff there. For Q1, here's some estimates already. Revenue is expected to be $5 billion. Oh, baby. Plus or minus $100 million. Could be fantastic for him. It is an increase of around 45% year over year. Incredible stuff. Versus a consensus of 4.33. Now that children is how you win in this. It's one of the only ways to win in this market right now. The triple beat, and even then sometimes your stock goes down, but the triple beat, top line sales, bottom line profit, and guess what? You also see great numbers with the guidance. Big beat on the guidance. And a non-GAAP gross margin expected to be 50.5% for the quarter. For the full year of 2022, revenue is expected to be 21.5, which is an increase of 31%. Very significant. But you see the difference here is the consensus was only $19.26 billion for this year. And they went ahead and said, yeah, we're going to put $2 extra billion on that line. I mean, how does that make you feel? We're going to go 10% over analyst estimates. Are you kidding me? That's ridiculous. If they're able to post that or pull that off, that'd be incredible. I mean, it'd be incredible. And this company, obviously, run very well. They do great things. We look at the press release, obviously, worth taking a look at. Record quarterly revenue, as I mentioned. Record full-year revenue was up 68% year over year. That's significant. $16.4 billion on the year. And we'll relate that, obviously, to the P ratio as we get around here, or to the market cap, I should say. We always wrap it up at the end, folks. You always got to stay tuned so you can find out if this stock's worth picking up at these levels. So today, announced fourth quarter revenue. We saw this on a non-GAAP basis. Fun stuff, but net income at $1.1 billion. That's on the non-GAAP basis, but I don't know. We don't know if they're. I guess that's pretty nice. So actual net income line here is at $974 billion. That would be insane. $974 million of GAAP net income, which is significant. Pretty darn significant. Not good when you look year over year. Look, I love the net income growth because if you look over the long term, this company's been growing significantly, but actually down 45% year over year from a net income standpoint. Curious why that is. We'll be digging deep and trying to find that out. Up quarter over quarter, but kind of shocked there. Would like to see what's causing it to be around half of what it was. EPS obviously fell in line with the same line here, but operating income up so significantly. My guess would be Q4 of last year had to have some sort of boost from. Oh, there we go. Yeah, that's that. Okay, never mind, folks. You don't need to worry. It was completely this tax valuation allowance. So this tax credit here is the main difference. So it's actually up significantly. Look at the operating income, and you can see the difference there, up 112%. That's where you see a really nice line there. So again, they did grow significantly this net income line. So don't really look at that because this is a one-time, obviously, occurrence that kind of boosted it there for last year. So, and this is a good way to see it when you look at the full year line. Even with that tax boost, the net income line the full year was up 27%. Holy cow. I mean, that's crazy when you're accounting for an additional $1.3 billion. So technically, you take out that little benefit there, this company grew by a massive, massive margin. We're talking about a margin of really, 180% around there. So it's significant how much they've been growing the net income line. That's what I've been talking about this whole time. I love the net income line, okay? And you see that when you look at a non-GAAP basis, obviously up 118 because it doesn't include for this tax allowance there. So really good year, obviously, as I mentioned there. As far as results, we talked about this. Yeah, as they say here, which included a $1.53 billion income tax benefit associated with the valuation allowance release. So nothing crazy there. We'll look at the cash and cash equivalents, obviously, as we love to do. Financial segment summary, we love looking at this too. Seeing what they're doing, obviously, really only two main segments that we talk about with them is going to be the computer and graphics and the enterprise embedded and semi-custom segment. So from a computer and graphics standpoint, computing and graphics, obviously really the main portion here right now when you talk about graphics graphics cards, processors, fantastic stuff here. $2.6 billion, up 32% year over year. I love seeing that, I really do. And up 8% quarter over quarter, driven by the Ryzen and Radeon processor sales. Really nice to see. Client processor average selling price increased year over year and quarter over quarter, and GPU average selling price increased year over year due to Radeon product sales, and decreased quarter over quarter due to product mix. Nothing crazy here. I mean, average selling price, it's not something I look for as a major sign of things. I'd like to see overall units sell. And obviously it just depends on what you're selling. That's going to change your average selling price. So nothing crazy there. You sell more of the cheaper units, which depends on what people are doing. But yeah, nothing crazy there. Operating income was at 566 compared to 420. But yeah, nice to see there. At the enterprise embedded and semi-custom segment, $2.2 billion here, up 75%. Darn significant, and 17% quarter over quarter, driven by EPYC and semi-custom processor sales. Operating income came in at $762 million compared to $243 million. Now that is a massive boost when you're looking from a net income standpoint. A lot of it really came from this, so that's really nice to see. So yeah, that's really nice to see this segment growing so rapidly, and mostly driven here by the EPYC sales as well. Annual results, obviously fantastic. We looked at those lines in the chart. Obviously, really nice to see. Recent PR highlights, there's nothing necessarily crazy. to talk about here. Yeah, I mean, nothing I'm super crazy about. Obviously, I suggest reading the press release yourself. Obviously, you should every single time, but for these videos' sake, we don't necessarily look at the press releases because I look at them on my own. And if there's anything significant to point out, I will point out. But most of this stuff's already been announced throughout the quarter. They just kind of wrap it up here. There's usually no mega new announcements, and if there are, they'll announce them actually towards the top of the press release in case you were curious. So we're going to look for the balance sheet. I don't think I skipped it. Yeah, I didn't skip it, but I was talking and I wasn't looking. I was just scrolling. Let's take a look at the balance sheet here. Year over year, I love a company that gives me a year over year. I love it. $8.5 billion right now of total current assets. Really nice compared to $6.1 billion of the year prior. It's nice to see. Cash position grew quite a bit. Short-term investments and accounts receivable all grew. So did inventories. Everything growing on this company from a short-term standpoint. Good to see. Obviously, you want inventories up too. More to sell. Now, total assets in general also grew pretty significantly. 12.4 compared to 8.9. Really nice to see that. Nothing major here in terms of growth. You see this other non-current assets grew by quite a bit. Everything else was kind of a little bit up. Nothing crazy though. But great growth in the assets. My presumption is due to this other non-current asset line. They probably raised some capital. You're going to see that in the debt line, I presume. And I guess I don't know if it's going to be this accrued liabilities line. I'm going to guess this is more due to this cash position. So sitting at 4.2 compared to 2.4. So that definitely increased when you look at a current liabilities. Accounts payable went up as well as accrued liabilities. My presumption is some of that had to do with this non-current asset line. That would be my presumption here. Long-term debt, though, I mean, do you want me to highlight this for you? $1 million? They eliminated the long-term debt entirely this year? No long-term debt. I mean, $1 million, sure, I'd do a lot of things for $1 million. A lot, folks. They eliminated the long-term debt this year. Are you kidding me? That's an incredible feat. So really nice to see. And because of that, you see great shareholder equity here. Growth, 7.4, really 7.5 compared to 5.8 of the year prior. So I think it goes without saying, AMD has a pretty small balance sheet for the company that they are. I'd expect actually a little bit larger of a balance sheet, and I wouldn't be opposed to it, but it's a very, very high-quality balance sheet. Really, really nice. Accumulated deficit down. I mean, everything's where it wants to be with this company. They've got great control over this balance sheet, great management. They're doing a really good job. So you look at the stock, obviously you talk about a 10% growth in valuation here. This will bring this bad boy to around $145 billion market cap. For a company next year only expected $21 billion by their estimates. Now, that's pretty expensive when you look at a forward standpoint. And if you look at a current standpoint, obviously only making $16 billion this year. You consider that's around 10 times the value there. It's not overly expensive, but how the market's treating higher valuation companies, it's kind of expensive. And from a P/E ratio standpoint, one that I'm not necessarily focused on a current P/E ratio. I think AMD you focus more on the when you look at the forward P/E ratio, I think that's a little more exciting to look at. But valuation from a market cap standpoint, I think this thing personally is trading cheap. Again, the 52-week high is here at 164, and this thing's fallen significantly, and we'll show that over the last year. So it reached 164, and since then down around 30%. I mean, that's pretty darn significant from their 52-week high. So just keep that in mind. I think this thing's pretty fair. It's in the middle of its 52-week high and 52-week low. I think this thing's pretty fairly valued right now. And I think over the long term, I really, really like AMD stock. I really do. I think it's a great company, run by great people. There's a lot of good things to come. Hope you have a great day.